In what way is this a global crisis, and how should the U.S. work with other nations to alleviate the problem?
Well, the crisis is surprisingly global. It appeared initially to be a uniquely U.S. crisis because the subprime loan problem was a problem initiated it appeared, by lending standards in the U.S. And it appeared to be a relatively small problem. The subprime mortgage is only a sector of the U.S. subprime market. But starting in the summer of 2007, we started to see European financial institutions in serious distress because of investments they had made in the United States. Still, it didn't seem to people that it should be so much of a global thing, but it continues to have global dimensions. And I think that this reflects the fact that it's a well-known, often observed, that we are a globalized world, that we are interconnected in many ways. I would emphasize that we're interconnected not only through trade and financial arrangements, we are also interconnected globally in terms of culture as well, so that people in these other countries, all the different countries of the world, think increasingly similarly. So the same kinds of complacency and excitement that led to the subprime crisis is at work in other countries as well.
Thinking domestically again, what is the single most important thing our government can do right now in response to the crisis?
Well, you said right now. I think that the first short-run thing is to do something for people who are defaulting, who cannot pay. If we do nothing, we will see millions of people thrown out of their homes because of inability to pay on a mortgage. This kind of thing has happened before in U.S. history many times. We've had many financial crises, and there has always been a tension. There have always been people who say, don't bail out these people, let them learn their lesson. And there's always been other people who say, but realistically, there are many innocent bystanders who are caught up in this. And so traditionally we have done some kind of bailout in these crises. So I think the immediate thing is to go back to that kind of enlightenment and recognize that we have to do something for people. But at the same time, we should be thinking long term, and that we really don't want to set up an economic system that is depending on bailouts after the fact. And so it's a theme of my book that the real thing to do is to come along with a bigger New Deal, more enlightened, more in connection with modern financial theory, a New Deal that will smooth over this kind of thing in a way that just makes it a non-event the next time, so that we just, this whole thing could have been not happen. We would be thinking about completely other things. There's no need for this kind of crisis. If we manage our risks properly, it could be history, just as bank runs are history. We haven't had a bank run since 1933. Once we get the system worked out better, everything behaves better, and then it just operates in the background without this crisis mentality. And that's what we really have to move toward.
To preempt these things in a more enlightened fashion, we need to have access to better information and to share information more effectively. You write about an improved information infrastructure. Can you talk a little bit about that?
So much of what happened in this crisis was due to the failure of the information to be transmitted. For example, many mortgages were being issued that experts knew were likely to create problems. If you make a mortgage loan to a low-income family with an adjustable rate mortgage, and you allow them to borrow a large enough sum of money that the first mortgage payment is already pressing on their family finances, then you know that later when it refinances upward, this family is going to have difficulty paying. But so if experts knew that this was a problem, why was it happening? Well, first of all, the family wasn't being told that. They didn't get this information about experts. Why not? Well, there was no one with a financial incentive to tell them this. They were talking to mortgage lenders who wanted to close the deal and securitize the mortgage and send it off. And so they didn't have an incentive. They were talking to a real estate broker who didn't have the incentive to tell them the truth about the housing market because they wanted to close a deal. They were dealing with mortgage brokers who were ostensibly helping them to get a good mortgage with a good rate, but were in many cases being paid by the mortgage lender to direct traffic toward them. They didn't have an incentive to warn them, no, you shouldn't take on this mortgage. They wanted to close the deal. And when you go to securitization of mortgages, you had inability for ultimate investors in these securities to find out the truth about these mortgages, and you had nobody with a strong incentive to warn them of the problems coming. So you just had a failed information transmission mechanism. I think that this is a wake-up call for us to change the way things are done. And ultimately, I refer to this as financial democratization. We want to have a system where people are getting disinterested advice, are getting information that's really relevant to their decisions, and that makes it easy for them to make the right decisions. Making this happen is going to take some work. But I think once we see how we can develop a democratized system where people are getting the information and they're actually making the decisions that are enlightened as the best information suggests, we will be living in a much better world. And I don't think we'll ever go back to this system, which will look after the fact much later as something antiquated and behind.
Would you like to hazard a guess as to where all this is headed? Can you foresee any kind of end game?
Well, I am optimistic that we will see progress as a result of all of this. I think that we have the potential for a substantial recession and a long recession. But that's the kind of thing that spurs us to take action. And we've done that in the past. And so I think that we'll do it again. That's my hope. But it's going to take some leadership, and it's going to take some willingness to change and to experiment. Ultimately, whenever you make some innovation, when it's not something that's conventional, it stirs doubts. When in 1911, the United Kingdom created the first unemployment insurance scheme, the London Times said this new scheme should be considered a great leap in the dark, and a bold one at that. So they were right. No national government had ever created unemployment insurance. And Lloyd George, who spearheaded that movement at that time in the UK, was taking a courageous step. That's the kind of thing we need going forward. We have to expand our institutions that manage risks. What we want to do is create unusual new institutions that protect people against the situation we have now. And these new unusual institutions will look adventuresome when they're first tried. But once we get them in place, I think it will lead to just a generally better world where we're protected from this totally unnecessary financial dislocation that we're experiencing now.
Great. Well, you mentioned the importance of disinterested advice, and you've certainly given us that today. Many thanks again for being with us. We've been with Robert Shiller, the author of the forthcoming book, The Subprime Solution, How Today's Global Financial Crisis Happened and What to Do About It. Thank you very much.
My pleasure.